a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Well, there seems to be a rally in the financial sector in the wake of the recent presidential election. Financials seem to be a bit on fire here. Included in that group are the banks, more specifically for our conversation today, the regional banks. Our research director in the ETF department, Nina Mishra, is going to talk about regional bank ETFs and the popularity that lies therein. Yeah. Why are banks just in general so popular with investors now?
Yeah, exactly. As you mentioned, their banking stocks have been on fire last week or so after the election. So investors are hoping that high fiscal spending, a lighter regulatory environment, and lower taxes will really benefit bank stocks.
Okay.
And higher spending and lower taxes will result in higher interest rates and higher inflation, which will ultimately lead to a steeper yield curve. And steeper yield curve really benefits banks, particularly regional banks, because interest rate spread is the main source of their earnings.
Okay, so you mentioned an easing of the regulatory environment. Just because the banks would be the beneficiary of that, what about the investor? Would that mean any less love from the investor for these banks in that kind of an environment?
I think investors care more about stock prices. So if their stocks do well, then probably they'll be happy with a lighter regulatory environment as well. I'm not very sure we'll see that.
Have to see, yeah.
We have to see that. And a lighter regulatory environment, fewer regulation, in fact, also may benefit these smaller banks more than the larger banks, because very large banks, too big to fail banks, they'll still be under, they will be heavily regulated.
Yep.
But smaller banks, for example, if they raise the threshold for stress testing, so many smaller regional banks, mid-cap regional banks, they will not have to undergo these stress tests.
I see.
And that would be huge cost saving for them.
Okay.
So both these things combined, high fiscal spending, low tax, or three things combined, high fiscal spending, low taxes, and a lighter regulatory environment. That's why bank stocks have been on fire, especially smaller bank stocks. And I wanted to add that even before the election, the financial sector was outperforming the broader market.
Yeah.
Because the chances, the possibility of a rate hike at the Fed's December meet had been going up. Many Fed officials, FOMC officials had started talking about a rate hike, that they are ready to raise rates because the economy has been brightening and inflation has also started picking up, and now wage growth is also ticking higher. So there is no reason for them to keep interest rates at ultra low level now.
All right. Well, we're going to have to wait and see how that plays out as well.
Yes, yeah, sure.
Unfortunately. You've got a comparative table here to share.
Yes, because regional bank ETFs are in focus. Investors are looking at them. They are buying these ETFs. So I thought I'll show ETF options to investors and compare them, because investors should know the differences between these ETFs.
Okay.
So there are three regional bank ETFs, and the most popular one is by SPDR. It's called the SPDR S&P Regional Banking ETF. It's an equal weighted ETF, so it has a lot of focus on smaller banks as well.
Okay.
Charges 35 basis points in expenses. The second one is by iShares. The main difference is that this product is market cap weighted. So larger banks within the space, they get a lot more representation in this product. In fact, the top 5 banks, top 5 holdings account for almost 45% of the asset base. And the top holding itself, which is US Bank Corp, that accounts for more than 16% of assets.
Okay.
So if you are looking for a product which holds more, larger, more stable limbs, then probably this is the fund for you.
The one to check, okay.
Yeah, but this is slightly more expensive. It has 45 basis points in expense ratio. The The third one is by Power Shares, 35 basis points again. This is also an equal weighted product, but this has a lot of smaller and even micro cap names in its portfolio. In fact, almost 70% of its assets are invested in small and micro cap banks. So this definitely has a higher risk profile because of its smaller cap exposure, and obviously a high risk potential as well.
Sure, so it just depends on how much risk you're willing to assume.
Yes, yes. So if you want a product with a high return potential, and if you are willing to assume risk, then probably this is the product for you.
And you and I were talking before we sat down here, and this entire concept of the momentum that exists in the banking group in the financial sector has to be reflective of investors' willingness now to assume more risk.
Yes, yeah, after elections, and we have seen that safe haven assets like gold and bonds, they have sold off, and investors are willing to take on much higher risk now, hoping for a higher growth scenario. So that is why all riskier corners of the market, they have done better.
Okay, so how do these all compare up against the broader SPY?
So on this slide, I have the comparative chart of these three with the broader market represented by SPY, and I have used the 1 week chart to show how Trump election has impacted these ETFs. So as we can see, the one with smallest cap exposure, KBWR, has been the best performer, up almost 15% in a week, and the other two, IAT and KRE and IAT in that order, they have also done pretty well, but not as good as KBWR.
All right. Well, do you own either of them?
I do not.
Okay. Don't forget, you can always check out more information on ETFs, commentary, and ETF picks, and delving into individual ETFs on our website, Zacks.com. Now, there's two ways to get to that information. You can link to some of it off the homepage. If you scroll down the page, there's a little section that will take you to more ETF commentary after it lists some of the more recent ETF articles. Otherwise, you can simply use the Funds tab in the top toolbar to get to the ETF section on Zacks.com. With Nina, I'm Terry Ruffalo.